30 plus million, 1.1 million in payouts. I'm telling you, this stuff's easy.
Someone who has achieved over 30 million in funding across all of his traders who he has trained and actually achieved over $1 million in payouts.
You need a predetermined expectation on the day. So you'll only favor this when you're bearish. I've used this for 2 years. All my entry work has just been refinements of the ultra trade entry. I'll give you guys one refinement that I made. Money, bro. That's money. That's all you need for the market maker framework. And what you're looked for targets here is these moves, they're not gonna happen every day. So you wanna maximize when these trades happen. You wanna like make sure, okay, I wanna be getting paid on these moves, right? So that's when you look to scale in and scale out. Frequency is not your best friend. A frequency to a losing trader, you're gonna bleed faster. And it's way easier to capitalize on that than trade this chaos, in my opinion, man. That's a big reason why I switched from day trading to swing trading, because I realized like the confirmation I'm waiting for these levels, they're not always gonna come. Sometimes you just get like a nuke. You just get a nuke and that's it. You can get same or better results trading this with less work. It's more efficient, in my opinion, to kind of just revert to this 50-minute. And most people, to be honest, yeah, they're not.
Welcome everyone back to Chart Fanatics, the go-to channel for all of your best breakdowns when it comes to trading concepts and strategies with the best traders in the world. Talking of which, today we have the record holder for the most viewed episode on Words of Rizdom till this day. There are a few people trying to catch up, but they haven't managed to do it. He's the most requested guest we've ever had. We already did a part 2, but people have been asking for a part 3, and I guess this is what you could class that as. But today I'm very proud to announce that we have someone who has achieved over 30 million in funding across all of his traders who he has trained and actually achieved over $1 million in payouts, most of all, for them, using this exact strategy we're going to break down today. And without further ado, it is the one and only Omor, aka NBB Trader.
The intro never gets old, man. The intro never gets old.
Thanks for being here, man. And I know that we've done 2 episodes so far, for you, dedicated to you, where we've talked. We've talked about the charts, we've talked about concepts, but today, finally, we get to really actually go into charts and specific strategies. And where should we begin?
So let's just go into it, yeah? So it's the oldest playbook in the ICT world. So it's just what we call the market maker model, but I like to use the OTE for the entry because this, we call it framework. This isn't an entry model, right? This is framework, right? So framework, and this is everything to do with entry. We can call it entry, SL, and TP. Even we can call TM for trade management because we can do like stop loss shaves, we can know when to like let it run, all those type of things. So it's these 2 things, and we're going to this component and then we're going to that component after, yeah? Cool. So every single, I'll leave this in. So first, yeah, oh, that's not even mind my handwriting, it's not the best, yeah? So this is framework. Now, the market maker model, we can slash power of 3, right? The first things you need to know is this. Where do they rest, right? Where do you expect this framework to unfold? In our second podcast, one thing that we said is previous day's highs, right? Previous day's highs and previous day's lows. And you can even say previous week high and previous week low. Now, some people take it to the extreme and they say like any previous candle because it's fractal. So some people say like previous 4 hour, previous 1 hour, previous 15-minute, but then there's something called variance in trading, yeah? So I only like to go lowest 4 hour for PD arrays. Now, previous day's highs, lows, week's highs, week lows, daily or 4 hour levels. So these are going to be the PD arrays. So like fair value gap, breaker, mitigation block, order block. Those are the main ones, right? These areas, right, are our key levels. From these key levels, we have the expectation of a market maker model to form, right? So you can break it up into 2 points, right? You can break it up into 2 points. Area for setup, and then you need the confirmation for the setup, right? So what does the market maker model look like? It's going to look like this, yeah? And then you're going to get some sort of reaccumulation, and then you're going to get another run and reversal, right? Break up, optimal trade entry. This, right? This, let's say, this is your 15-minute, right? This is your 15-minute, and you see this level. This level is any of these previous day's highs, previous day's lows. So of course, this is a market maker sell model. So this can be from running the previous day's high. Now, if you're in my Telegram channel or like you follow me or anything on social media, you already know this, right? You need a predetermined expectation on the day. So you'll only favor this when you're bearish. And I'll give you an example, right? So let's say Friday, right? Fair value gap. Now, Monday usually does this, right? Monday usually we like to see a small range day. So Monday you're going to get something like this, right? You'll get maybe a sweep on this candle. Let's draw that a bit bigger. You'll get like this. Tuesday, what we're doing is this, right? What I like to do is I'm only considering days where we open closer to these one of these key levels. I'm not going in every day trying to find this, right? Because I know where this forms is only around these key levels. So if where I'm opening is not close to this, I'm going to wait for that. So that's the patience aspect, right? When this, now Tuesday, the expectation is this, right? We're going to open up. This is going to happen from Tuesday's opening price, right? So we should open up. Let's say we open. And then we trade down like this, right? We don't have to take the next candle. The next candle is going to be a continuation of this, by the way, and we'll cover that, right? Now, this, right, is this. Yes. Do you see my point? So this, right, if the people can see it, right? So this, all of this candle
is that price action.
Is that price action. Now, this is all you need, right? This expectation is all you need. But the only thing is this, right? You need one of these key levels to key off of, right? Now, the next follow-up question is this, right? Let me just remove this arrow. So just make a note that, like, screenshot that this day, right, when you're opening at that key level and you're bearish, the expectation from that level is we're bearish overall. So now we should open up. We should have what we call a smart money reversal. There's two sides of the market maker model, right? So let me clear this out. There's two sides to it, right? So you're gonna have you got this side. Yeah. This is as well in the power 3, right? This is your accumulation. Yeah. Sorry. This is your accumulation, right? This is your accumulation. This side of the curve, right? This side of the curve is called manipulation, and this is distribution. Yeah. You want to kind of trade the distribution. So this is the distribution side of the curve. You're bearish. Now, this is why it's really important, because if you don't have a bias, yeah, you don't know which way is manipulation. You don't know which way is distribution. So, for example, people get caught out all the time. They'll start thinking this is the actual move. Like, if you're not aware that it should be a bearish day, we should expect a bearish expansion from here, right? That is when people get caught out, because they get long. You know the trend is your friend till it's not your friend, right? Yeah. People get caught out here because they're going to try long through that fair value gap. If the weekly is bearish, the daily is likely to be bearish, and you're at a daily key level, chances are you're going to reverse there.
Hey guys, I hope you're enjoying this episode so far. And don't forget, we send every single strategy breakdown from every episode for free on chartfanatics.com. So the link for that is in the description below. So just make sure you click that. You just put your email in, and every single week we will send you an up-to-date PDF strategy breakdown for you to keep, to learn from, to reference for free. And don't forget, we're also launching Chart Fanatics Live, where your favorite traders from Chart Fanatics will be live trading every single day. I will also be including special guests on the live Chart Fanatics edition. So make sure you go subscribe to that YouTube channel right now. It's linked on the main profile of Chart Fanatics, so make sure you're ready for that. Let's take a break for a minute there, guys, because I want to tell you about our preferred prop firm here at Chart Fanatics, and it is Apex Trader Funding. We are no stranger to Apex. We've had JadeCap and Trader Kane on Words of Rizdom and here on Chart Fanatics. Now, they are well known for having record payouts on Apex of over $2 million a piece. Now, even if you don't achieve a 7-figure payout, the reality of achieving a multi-6-figure payouts with Apex is absolutely achievable and an incredible opportunity at that. And you can see that on screen right now with all the incredible payouts being paid out to traders around the world, traders just like you. Now, Apex is the biggest futures firm in the entire industry and have paid out over $500 million to traders across the world. No matter the type of trader, you can be one of them too. Now, one of our favorite things about Apex is that you can get up to $6 million in funding using the 20 accounts that you're allowed to have and the 300K account at that totals $6 million. And another thing that we love about Apex is that there's no daily drawdown. It's a one-step evaluation and the fact that it's uncapped payouts. And 90% of the profits made are yours to keep. Now, don't forget, regardless of the type of trader that you are, you do not have to worry about trading news as long as you are following your day-to-day trading strategy. The possibilities are limitless at Apex Trader Funding. Now, you can get up to 90% off. 90% off, the biggest discount in the entire industry at Apex using the code CF and the link in the description below. Thanks to them and thanks to Chart Fanatics. Make sure you get your futures funding with Apex. Now let's get back to the episode.
That circle, right?
Yeah.
That's key. This is called a smart money reversal. ICT is a breaker block. Now, a breaker block is literally when you have a low, a high, right? And then you run that high. So you have a high, low, a high, low, high, high, lower, low. People call this the QM. Retail friends are going to call it my head and shoulders, right? This is a reference point for the first entry, right? It's a first entry, and you probably won't get optimal trade entry from here to here, and we'll cover the optimal trade entry after. But this is the framework you're looking for. This is the first thing you're looking for from these key levels, right? Accumulation at the opening price, so like, you know, your Asian range. Yes. For example, we'll call this in the ICT world a classic sell day template. From Asian's range to midnight, right, to like London essentially can be, we expect like small price accumulation. There's not really like any kind of quote unquote volume, right? And then London should kind of put in the opposite end of the range. It's usually the manipulative move of the day, and then you're waiting for that breaker block. Now, you see the fingers, right? You see this. You see a lot of times everywhere, there's always a conversation about body close or is it wick close? Yeah. Bodied close. 15 minute, wait, any of these levels, daily or 4 hour, use a 15 minute. So you have something called time frame variance, yeah? I have a video on this. Time frame variance is basically, you know, like how you got the investors and you got like the fund guys levels and whatnot. Yeah. They talk about the noise and how 1 minute chart is just all noise. The actual word for it is the variance. So if you look at your 5 minute and your 1 minute and your 3 minute, yeah? So like, let's say again, right, let me just clear this because it's important, because time frame alignment, you know the time frames you're using in trading? Yeah. I think that's most people's problem is they have no time frame alignment. Like they're good at the daily bias, but then the entry level is just, I don't know, like they just go like really left.
Just before we quickly move on, as you mentioned on that previous diagram, the problem is a lot of people get long. They think the trend is your friend. What this is really doing for you and the people at home who are listening to this is it's allowing you to really identify, here's the overall move that I should be looking at.
So the market maker model, yeah, you see that move on the 4 hour daily retracement, you can have a 15 minute market maker sell model, right, is a 4 hour retracement expansion. Yeah. So for example, yeah, if your 4 hour is going like this into a fair value gap, or this is your daily, the 15 minute is going to look like this. This is the fractal that it's going to look like on the 15 minute. Yeah. Right? And then let's say this level, right? Then it's going to get there. And then it's going to happen. Yeah. This is your 4 hour. This 4 hour retracement, you see this? right? This leg here, right,
Yeah.
is manipulation.
Mm-hmm.
That move then lower is this move here.
Yeah.
That move. So every single quote unquote high time frame retracement is some sort of market maker model. This is just how the 4 hour, if you like magnify it, is going to look like.
Yes.
Right? Now, it's really important because having that predetermined expectation of that 4 hour, when you're bearish on the 4 hour daily, yeah, and you see the 50-minute trading high into these levels in this form, you should kind of be like locking in. Do you see my point?
Mm-hmm.
Because from these levels, right, you know, like, it's to get short, you kind of need a retracement higher.
Yeah.
To sell, you want to you want it to like kick higher so you can sell from a key level, right? Or you can look to like at least get to a level, then start to like find your signatures in price. I only use one confirmation usually, or I'll have a second confirmation and no more than that. Because over confirmation, you're never going to get into your trade. Like I know some people, they like, okay, I need to wait for that, then I need to wait for this, and then it balances. Look, you're gonna get one trade a year, and it's not gonna cut it,
Yeah.
right? Obviously, you need your confirmations to be like very effective.
Yeah.
Right. So the confirmations I like to use is obviously just like the standard CISOD, change in state of delivery. You see when we make this breaker block, right? If we go here again, right? You see there are two different breaks.
Mm-hmm.
This is a clean break. This is displacement, no displacement. Displacement is like, you know, like bodied candles,
Yeah.
engulfing candles, right? So big engulfing candles.
Showing that
Momentum, volume has entered. Whatever helps you understand displacement, yeah. Right? Whatever's gonna help you understand it, just go with that in your head. Because some people say, oh, is it like when like think of like a big sell order is coming into the market. Yeah. ICT people say this is like the intention for the algorithm to reprice, whatever floats your boat, right? Yeah. Displacement is like the measure, right? It's like the grading of repricing to me. So when I see like this, right, like a shallow break, yeah, I'll let a retracement go, right? That's my second. That's the only other thing I need. And then that next retracement, I'm on that.
So this would be one. And if let's say you don't get that,
if this is wiki, if this is like a wiki close, yeah? If this is a wiki close, or the other thing is this, there's a fair value gap here. Okay. So it's now breaker block vs fair value gap. Okay. The ultimate unmovable object and unstoppable force, right? So when you have either a wiki close, so it's the only two scenarios: wiki close, or there's an opposing 15-minute PD array. Because this is your 15-minute chart. Am I gonna dip down into this and this is a total sweep to go higher? Let a retracement go. This is what people call the silver bullet. This is the second retracement, right? Silver bullet. This is the second retracement, second leg of distribution. Now you see, like here, if none of those are there, it's a good close, and there's no PD array, or this PD array has already got traded through. Yeah. Money, bro. That's money, right? That's all you need for the market maker framework. And what you're looked for targets here is you see this low here. Yeah. You'll try to work towards this low. Okay. Right? Now you'll manage the trade as it's going. Like you start to shave your stop loss off. Try to get break even. If you can get break even here, try scaling again. Like your trades, right? Your biggest trades will come with scaling in. How I like to scale in is this: if I'm break even, I always have like a fixed risk on the trade, like 1%, for example. If I get fixed to break even, I got another 1% to play with. And why it's so good, yeah? Because my risk, okay, worst case is going to be 1%, right? If I get in two of those, the leverage towards a profit is doubled, but the risk side is only 1. But if I get that to break even again, I can look to add more risk on again. But if I get that to half, then I got half. Whatever risk I knocked off, I can look to scale that back in. But that's hard. Yeah. It feels uncomfortable. It's not the easiest. People rush it, but
that's more the advanced level.
Definitely, you need to it's like picking up a football and trying to do skill moves straight away. You won't be able to do it, right? Over time, that's definitely the focus, because you'll make the most. Because these moves, they're not going to happen every day. Yes. So you want to maximize when these trades happen. Yes. You want to make sure, okay, I want to be getting paid on these moves, right? Yeah. So that's when you look to scale in and scale up, right?
Do you ever notice traders making the unfortunate mistake of buying here.
You
Right?
can.
To sell, but the problem being that they buy and then hold that bias. By the time they
Yeah.
get here, they think,
So-
well, I should hold this longer.
That's a good question. Yeah. So if you're a London Open trader,
Mm-hmm.
some people trade the London Open, right? So there's two schools of thought. And neither is wrong, right? You trade to the manipulation or you trade away from the you trade to the key level or you trade away from the key level.
Okay.
But in my opinion, I like to trade away from the key level. I've traded 2 key levels before. Like if I see like this, right? Personally, I'm a swing trader. So if I see this 4 hour, right?
Yeah.
And I got like a decent, I can get like a 2-to-1. I can just hit the next open for my stop loss a little under there and take profit in that fair value gap. You see my point?
Yeah.
But with this as well, you need like a strong conviction. But the only thing I don't like is if we don't get to that fair value gap, you're gonna like, as you're getting close to it, you know, it could just run short of it. Like you might get an S&T in a market, for example. Like let's say this is the euro.
Yeah.
Right, euro might not get there, pound got there. Euro has weakness.
Yeah.
So
you get that
you might not,
divergence.
so you're going to get that divergence and you're trying to long and boom, you're just on your ass. So I personally like to trade away from the manipulation, but you see the best day that this is offered, yeah? Mind if I rub all of this out?
Of course,
So
yeah.
take a screenshot of this, right? So remember, these are your key levels. This is like your daily chart. Consider this one, 4 hour chart, a retracement into a key level 4 hour. It should look like this on the 15-minute and you're trading that. And the cue to know that it's happened is you get this smart money reversal, you get the breaker block with displacement. It's closing nicely under it. And then we'll cover the entries after, but that's the framework. Manipulation, breaker block. The right-hand side of the curve is what you're looking to trade mainly, the distribution side of the curve.
This is what you meant earlier when we asked a particular question in terms of time variance. This is it.
So this is your 15-minute, right? So this is 15. Now, on your 1 minute, it's going to look so crazy. Like you're going to get, like, you know, this is going to be your 1 minute chart and then it's going to get there. Then it's going to be like, it's going to look like this on your 1 minute chart. There's going to be, look here, there's going to be, amount of candles here, there's going to be 15 times more there. Yeah, there's going to be 15. And do you know how I see it is this, yeah? 15 times more the work. People think it's less work going on. No, it's more work because you're reading more data. You're reading 15 times more. Look, I think 15 and 30 is better than 15 and 5. I think 30-minute is like a slept on time frame. This is hell because you see in every single, you see all of these.
Yep.
It's going to have all of these stop runs. It's going to be so erratic. You're going to have all of these stop runs. People say, you know, yeah, oh, he just doesn't have the skill. Look, I've got videos of me trading the 1 minute back in like 2022 when I was day trading scalping. I'm telling you, yeah, you can get same or better results trading this with less work. It's more efficient, in my opinion, to kind of just revert to this 50-minute. And most people, to be honest, yeah, they're not, and it's not like a dig at people. You might not be talented enough or geared to these really low time frames.
Yeah.
Like, you know, I think you need like a level of like probably like ADHD or like a really insane focus, yeah,
100%,
to like really like, because
your
it's
mind
easy to
needs
get
to really
blindsided.
be able to move quickly, and you need to be able to handle because with this side you are, regardless of how fast you think and how fast your mind is going, you're still going to face a lot more when it comes to the break evens, the losses, etc. So taking Kane as an example, you know, when he mentioned his was the 3 minute, it wasn't even the 1 minute, but he says that the reason that a lot of people try and do this and they fail isn't because of the model, it's because they don't aggressively manage and handle so many break evens and be okay with that.
As well, you know, like what I'm saying, this a good analogy I can use is like, you know, some people just, if I chuck numbers at you and I tell you like just keep adding them like 10, 15, 8, 9, 1, 1, some guys can just tell you, yeah, what the sum is. Some people can't. It's like some people can read the 1 minute, but the thing is they're trading the 1 minute, but they're also considering the 15 and the 4, right? When you're trading the 1 minute, you have more things to consider and at a faster rate. So in my opinion, it's a safer, more one size fits all if you just consider daily 4 hour 50. I promise you, look, I know so many people that used to be the 1 minute and they all revert back. Like usually how the thing goes, they start here, they think, all right, cool, I can just get more trades because it's fractal. I can get more trades if I go down a time frame.
Yeah.
And what happens is they see that this is actually not what I thought it was.
Yeah.
And then
it's
they
the
revert.
allure, you know, high risk to reward and you know, more precision, etc. versus the chaos that comes with it. Because I think one thing I know, I took 2 years break from trading and I just started this year again. And the one thing I don't miss is that regardless of, you know, your financial situation, you having an edge, you will always, to some degree, feel when you're in drawdown. Feel when you've taken a loss. Feel when, especially when it's like you start getting sucked into these lower time frames, the chaos that comes with it.
It's like, you know what it is? Frequency is not your best friend. A frequency to a losing trader is just you're gonna bleed faster.
Yeah.
Frequency is like, there's no point of going for more frequency if you're not a winning trader. And the thing is, you can look, if you're trying to increase your frequency, you don't need to change the time frame, just look at more markets.
Yeah.
Right? So you just need to look at more markets instead of trying to lower the time frames. Because you know what it is like? It's a whole different plan.
Yeah.
But
it is,
you know, like this, you're thinking, okay, that's a whole different trade plan. It's like, you're good at playing center on the pitch. Now you're going to try to play on the wing. You're not a winger, bro. You're a midfielder.
Yeah.
You're trying to play this position, right? Just go and do this.
And the one thing I think is very important is that even to do this, even if you want to do this, because there will be very few people out there who probably are centered towards this, no problem. But to do this, you still need to master that first. And I think that's a big mistake people make, right?
So the 1 minute guys, what they like to do is they like to use, instead of this, they like to use the 1 hour. But still, the 1 hour, you still need to kind of know where the 4 hours going. Do you see my point? Because of the variance. If you're day trading, right? If you're day trading, you're trying to get the daily expansion. So you want to cap your variance so that you're on a lower time frame, but it's somewhat in line with the daily expansion. Like this is gonna not look like a bullet. This is a bearish daily candle, right? This is way more fitting of a daily bearish candle than this. This is gonna have uptrend, downtrend, uptrend, downtrend, up. This is gonna have a clear one move higher and one move lower from the open, and it's way easier to capitalize on that than trade this chaos, in my opinion, man.
100%.
If you're trading like London, right? That's what we were on before we went to this, right? So
yes, we were talking about London, two options, right? London or thereafter.
Again, you want to be opening close to a PD array, right? You want to be opening close to a PD array because then you kind of know London should trade into that PD array. It's always like this, yeah. And you see, like I always say have a trade plan for the day. So that you need a play of the day. You need to kind of be already favoring a kind of play, like a playbook for the day, right?
Yeah.
So for example, I know if we're overall bearish on the week, yeah. If I'm bearish on the week and Monday, if Monday trades higher, Tuesday, right? Tuesday, I'm favoring this one and reversal. I'm favoring that straight away. I'm saying, look, previous day's high, you're going to get that. Previous day's high, and you're going to get that breaker block, and then you're just trying to trade that away. Now, if you're a London open trader, right, you might get that even in London. And you'll try to position that. If you're in there in London, hold the trade through the day. Because the data shows, yeah, the low of the day is going to come after like 3 p.m. New York time. So you hold it through the sessions, right? So you got your London open, which is 7 to 10 a.m. And then you got your New York open, which is 12 to 3. And then you got London close, which is another slept on kill zone. It's like the ugly child of like the kill zones. London open is 2 to 5. I said it in UK time. In New York time, it's 2 to 5, and then 7 to 10 is New York. And then 10 to 12 is London close. But you know when London close is good, yeah? When you have those 10 a.m. folders, you know, on Forex Factory, right?
Yeah.
And they're usually on like Thursdays or Wednesdays, right? I believe consumer confidence is always at 3 p.m. That's the UK time. 10 a.m. New York time. That's when the London close is good. So depending now, right, on that level of market maker model and AMD, right? Then the rest is profiling the day. So profiling the day, for the people that don't know what profiling means, is how is the day gonna build that candle. So this can be London, right? This all can be London, and then you'll get here. And then New York is what I like to call the London to New York optimal trade entry. So you got this high from London, optimal trade entry, right? Now, before this is London, and you might get this in New York, right? New York, and then like 8 a.m. New York time, you might get that in New York, that breaker block, right? And if there's still time in New York, or it's a London close kind of day, like if basically London close is good when New York, you know, if this, if this is like 9 a.m. New York time, one thing that ICT traders don't really consider too much is ADR. It's a retail concept. Phenomenal, right? The ADR, so for example, if you look at the size of the daily candle.
ADR is average daily range, right?
Yeah. So traditionally people use the 5 ADR. Some people use the 3 ADR. Some people use like 7. I use 5. It's kind of like you can just eyeball it as well. You don't need to really consider it. So you know, what people don't really realize is, you know, like let's say this is your daily candle before, and you see at here, right? Let's say it here. You open and you sweep that candle, and your candle's only this big. In New York, your candle's only this big. By the end of this candle's lifetime, you know that this candle should, this candle should be down here.
Yeah.
But so you got this space to capitalize on. People don't realize that, right? So that's New York, and the candle's looking premature.
Yeah.
London close can offer that second leg,
Yeah.
right? Now, the only time where people say, should I get this third leg? If there's no ADR here left, you'll see like something like this happen, but then you'll just go sideways on the day.
For the rest of the day,
And
yeah.
you don't want to be there, and you just have to accept that I was late and I should have, it was an execution problem. I don't know why I didn't get in here, and you don't get that third leg really, right? Now, remember, so everything now we've kind of covered is this, right? The market maker framework. Remember, now we can cover like the optimal trade entry,
Yes.
right? So that's the framework. So remember, you need a predetermined daily bias, right? You need your key levels, 4-hour minimum, in my opinion. It's just better quality. Like you get better quality from the 15. You can use the 15 and the 5 together, right? But the way I like to do it is this: the 15 has to do the reversal, have the change of the state of delivery, and then the 5-minute can be used for like, I'll give you an example, yeah. Is this a backward? Yeah, cool. So you know, like this, yeah. You might get something like this. Let me just quickly draw it. You might get something like this, yeah. So you got this. This is the same thing, yeah.
Yeah.
You get what I'm saying? So
Yep.
this is your. Let me draw that like this, and then you get this, yeah. This is your 15-minute, right? You know the 15-minute candle. Obviously, there's going to be 3 5-minute candles. The 5-minute is going to print at a faster rate, right? So when the 15 has kicked that in, right? The 15 has done that. You can then look to the 5, and the 5 from here might have left the fair value gap. So you see like these candles on the 5.
Yeah.
On the 5, it might have left the fair value gap already. And then you see this candle. You'll see this candle might open, and it might wick, and then trade down lower. That 15-minute wick though,
The break.
is a 5-minute retracement quickly into this fair value gap, and then continuing down lower. That's this 5-minute up candle is that wick.
Yes.
Do you see my point? So before that fair value gap gets lifted of the 15-minute, it will show itself, right? A 15-minute big displacement candle is likely a 5-minute fair value gap. So if you see a big displacement candle in this region that breaks it and leaves that breaker, that's when you can elect to use the 5, right? You can use the 5 there and see if there's a fair value gap. And that's it. That's the only time I'll use the 5. Other than that, it's all 15-minute. Because you see, once you get stuck on the 5-minute, as this prints, it's going to leave more fair value gaps. And if you get short-sided only on the 5-minute, a lot of times what people do is, look at your losses here on the 1-minute and 5-minute. If you're just trading the 1 and 5, look at your losses and then look on the 15-minute. Your stop loss is probably bang on some sort of 15-minute fair value gap. But again, you got short-sided because you're just too zoned into those very low time frames. You see my point? So on the 15-minute, you know, it's safer, it's better, it's a bit slower, right? Speed is not always your friend. Too much velocity, like, you know, what just happened on the S&P, like a minus 10% week. That's sickening, like velocity. You don't really want all of that volatility. It's not too much, like, it's that scalping gold. It's going to make you sick, in my opinion. So now going on to the OTE. So what we've already established, yeah, is one side of the curve, right? And then this side, right? So A, M, D. Accumulation, manipulation, distribution.
Yes.
And this is what we want to trade, right? Distribution is what we want to trade, right? So the next question is, how do I align with the framework? It's simple. Optimal trade entry, right? It's if we draw a fib, right? You got a fib.
Yep.
I'm gonna eyeball this and say this is the 50. Yeah. So this is your 1 level. This is 1. This is 0. This is 0.5. And you have 3 optimal trade entry levels, right? Like this. Golden Fibonacci retracement, same thing. It's literally like there's no difference.
Yeah.
There's no difference. You can call it a golden fib, right? So
61.8, 78.6.
we call it 62.
Oh, really?
So what's the difference? What's the difference?
The 0.2.
This is 0.705.
Okay.
And this is 0.79, right? Now, what we want to do is this, right? This is your entry. So you'll have some sort of swing made, right? You'll have some sort of swing made, right? In the market, this is your distribution side of the curve. In my opinion, yeah, this is where filtering becomes very important. Now, you see when you're on your 4-hour chart, not every retracement in your thingy comes to the 50%. Yeah, not everything comes to the 50%. When you come to the 4-hour and the daily, I say take every single key level as it comes, even if it's not in the 50%, just because you're going to be looking for confirmation there anyway. On entry level, confirmation's done. Confirmation's done, you're just looking to hit it. So now, because there's no extra confirmation, because now if you want to wait for, I want to wait for a break in the fair value gap, bro, you're going to miss the trade.
Yes.
You see, like, just hit the level. And we'll cover that as well. That's a big reason why I switched from day trading to swing trading, because I realized, like, the confirmation I'm waiting for at these levels, they're not always going to come. Yes. Sometimes you just get like a nuke. You just get a nuke and that's it. So if I just hit those levels on the 4-hour daily, I don't need to wait for a lower time frame model. So I just kind of skipped that because my direction was pretty good. That's why I changed it. But back to this, yeah, you need to get good at filtering here. Anything when you're shorting, right, when you're selling, anything under, in my opinion, the 50%, nope. 50% or nothing, right? Because that will give you at least a 1-to-1. Stop loss for now, right? Yep. Stop loss for now is always going to be here. So red, SL. Green, TP, right? You always want to get a level of premium. This is when, you know, when people say you always want to sell in a premium, we mean entry level, not daily 4-hour. You want to be selling at bearish key levels, but not every bearish key level is inside that premium. Do you know? Yeah. Like, there's going to be a fair value gap at the 50, maybe a bit under, especially, you know, that breaker block. Breaker block never gonna be here. Breaker block is low in the thingy, but there's specific times where we're gonna get in ahead of this optimal trade entry, right? 62 level off the top of my head, and this is why I love it. Yeah, is always gonna give you like 1.63 R. This is like I think it's like 2.35. It's gonna give you 2.38 R, and this is gonna give you like 3.7, right? If you enter, because do you know what it is, yeah? You know that some people, they rely on like a fair value gap. Yeah. Or like they rely on a specific PD array, but it can be at different levels in the range. Objective. All this is measuring is, so from this high to this low, 60% of the range. That's all, it's measuring just 60% of the range. I'm just trying to sell, like, I want to sell, but I want a 60% this premium. I want to sell at a nice premium. So sell at every single time you sell at this level, with your stop loss at the 1, TP at the 0, you will get that R. Yeah. No matter what, you'll get that R, right? 2.38, 705, objective. These won't change. No matter if the range is, no matter if the range is this big or that big, because it's a percentage of the range. It's fixed. It's fixed. That's why I love it, because now, you know, when you take profit, it's fixed, yeah? In my opinion, this is when consistency starts to creep in, because now your risk to rewards are going to be the same, right? Your risk to rewards are going to be the same. I've used this for 2 years. All my entry work has just been refinements of the optimal trade entry. I'll give you guys one refinement that I made. The chances of SL at the 1 happening, and if you had the 0.9 level too, you know that area between 0.9, so 90% and the 1, right? The chances of your trade hitting 90% and keeping the 1 in between is less than 10%. It's like 1 in 15 trades. So it's very low. It's like 5% less, it's 5 or less percent. So if your stop loss now, if you know now, and this is a refinement I did over time, like, okay, if I'm getting stopped out, is the 90% also stopping me out? Because then it's just the easier invalidation level.
Yeah.
Do you see my point? You want to put it at the level of invalidation. So instead, yeah, maybe this is the 90%, and you can put your stop loss there. You know what the risk rules come with this now? Bro, this is 2.2R, 3R. I don't even know, because 79, I don't really use 79 too much. I'm usually within here. Probably 5R. 50% comes 1.2R. And now, if you're in between 50% and 62, you'll get your original optimal trade entry risk reward, just with that one shave, right? But now what's going to happen is this. You'll get into the same trade and you'll take more profit. And it makes all the difference, by the way. Like 1.6R to 2.2 is a big deal. Like you don't need to, if it's like what? It's nearly like a 50% more profit on each trade. If you go on a compound calculator and you do 2 charts and you do one increase by 50%, you'll see the difference in the charts exponentially over time, over like 10, 50 trades.
Things that bigger picture view is what a lot of traders miss, is that they don't think on the bigger picture, and they may hear like, oh, just a slight increase, but it's thinking in terms of consistency. When you consistently hit these larger increases over time and are able to build these refinements, because off the back of this, I know, off our podcast, these refinements are really built off data. You've collected the data
it's all
over
data.
time to be able to make these changes or tweaks.
Because so exactly, yeah. Because look, I say you always need to kind of be closer to what, and this is, by the way, the initial TP. This is only initial. It's probably going to kick like lower, like here, because it's a continuation trade.
Yeah.
Like you should make a new low, right? Unless you consolidate, but you should make a new low. So like you can get like 3R. If you're using 90% of the stop loss, 62 level, and you let it run to 3R, it's a very easy 3R model. It's a genuinely very like 2.5R. Let's forget the 3. Because if this is giving you 2.2R, you just need a little bit under the low to get that extra like squeeze to get the 2.5R, right? Now, how would you start shaving the stop loss off? Look, yeah, guys, you need to always eliminate risk where you can, get to break even, right? And now, people that say, oh, I'll go to break even and then it hits my stop loss and whatnot. Okay, cool. At every single point of the trade, the invalidation zone changes, right? For the people that moan about their stop loss getting hit, journal. If you don't journal, then you can't help yourself. But in your journal, yeah, one thing you should journal is this. My break even stop, how many times if that got hit would my initial TP, my initial stop loss get hit? And if you see like a lot of times my break-even stop gets hit and then my original stop loss gets hit, it's a good shave. You're saving yourself. Now, if you see your original stop loss gets hit and it's like categorically going to your take profit so many more times, you got a problem with shaving risk. You're probably doing it a bit too fast. But with optimal trading trades, what I like to do is this, right? Say I'm entered here at 62. I'm entered here.
Yeah.
Let me make it a bit bigger. I'm entered here, yeah? Now price starts to go down, right? At this level, why the hell would my stop loss still be here, right? If it runs back to what I think, like probably here now, I'm probably gonna get stopped out at my initial TP. So what I like to add here, the 0.2 level, right? So if we got the 0.2 level, and we get here, at 0.2, we should be making our way nice down to this range. Eliminate risk, get stop loss, go break even. 0.2, and you're closing there, not wicking there, yeah? Like you're closing there, like you're closing there.
Showing that displacement.
Yeah, you're closing there, because a lot of times, yeah, you'll see that candle just, there's a saying, the wicks do the damage and the bodies tell the story. You want to close there, right? Once you've closed there, break even, I like to call it your feet's up. Like it's either now, you got nothing to lose and all to gain on this trade. Now your initial TP is likely to be here, yeah? If you're seeing you're closing with speed towards your take profit, remove it. Remove the take profit. If you kick that, yeah? And it's a conscious decision, by the way. A few things go into it. The way I teach it to my group is this, yeah? You see, whether or not you make that conscious decision of removing the take profit, it's a coin flip, yeah? In the sense of this. Does your account need that take profit? So for example, yeah? Let's say you're selling a phone to me and you needed £100. Like you need it, you're selling it because you need the £100, yeah? And I told you, Riz, yeah, coin flip £80 or 110? Would you take the coin flip, or you need that £100 that you need to feed yourself and your family? You're gonna take that. No, bro, I don't want to do coin flip. I'm gonna get the 100. That's like people in drawdown or whatnot. I say just focus getting back to break even. If you're up, let's say like a few percent. Let's say you got the money, you're just sending an old phone, like it's an iPhone 14, you got iPhone 16 now. Coin flip 80, 120 Riz. You know what? Let's do it. Let's have a bit of fun. Coin flip. If you can coin flip your account where you can get, you know, like, you can miss this take profit and take maybe 1R.
Yeah.
Then take the coin flip. It's always a coin flip like this. That's how I think. 1R or 3R. Okay, I'm at 2R. 2R or 4R. Can I coin flip that stop loss, that trailed stop loss?
It's important, as you said, like to notice where you are.
But you know what's gravy to me, yeah? What is like the best scenario to me? Remove the take profit, you kick the crap out of that. That becomes your new stop loss. Your new stop loss was your initial idea's best scenario. That take profit on that low, if you remove the stop loss and you kick the crap out of that low, that becomes your new trailed stop loss. It was your best idea going into the trade setup. It is now your worst case scenario.
Yeah.
And then trail as it goes. So some people, how you like to trade it. So again, a few different schools of thought. No one's really wrong. It's just preference. Some people trail off R. If you're on futures, you need to be good at trading, because that trading drawdown is like fire under your bottom. So some people do it off price action, where like price shouldn't go back here. So I'll put it, whatever R that is whatever R that is. Some people just do fixed R system. I kind of gravitate towards the fixed R system, if I'm to be honest, because you're trading for the profit. Do you see my point? Sometimes P rates get traded through whatnot, but R is R. Do you see my point? Price of levels can get invalidated. So now that's how you trade the optimal trade entry. Now let me just rub this off so we can make it clear, right?
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool in the entire trading industry. TradeZeller allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable, and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZeller, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZeller and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZeller, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on TradeZeller right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZeller. The links for TradeZeller are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
So remember what we said, yeah? You're gonna have this. This is gonna be
This is your distribution.
Yeah, distribution side of the curve. Right hand side, yeah, is right hand side always distribution, right? It could be a market maker buy model. I've done, you know what is? I've done so many thingies. After this, we'll show the inverse, because I've been selling UJ, so it's been a market maker sell model. So this is your first swing point. Optimal trade entries need to have graded swing points.
Okay.
Right. This is the thing with optimal. This is what makes. This is everything that optimal trade entry to me is about. It's because your stop loss is the swing. How good is the swing? If this swing you think, yeah, should remain intact, anchor your fib from there. So what I like to use is this, right? Runs on stops and from breakers, or a swing that quote unquote mitigated a PD array. So let's say like a fair value gap, right? Like for example, let's say this was a fair value gap here. Again, that's a new swing because that's invalidation now. If we trade above that, it should go higher, right? So just to say quickly, yeah, break a block, first one, and it doesn't always get optimal trade entry, you have to probably get ahead of it. This second leg, I'm only going for like 50, minimum 50, right? So if you go like from here to here,
Yeah.
this is probably 50%. This is probably auto trade entry area here.
Mm-hmm.
And I want to position in there, SL there, or like here, take profit there, minimum.
To position in here though, are you just simply setting
Yeah,
an order?
bro. The hard work's done from the 4 hour,
Yeah.
like 4 hour area, and that confirmation, the chain of sale of delivery is go time, bro.
Yeah.
What other confirmation I need? Or remember what we said, if there's a rubbish close here, we'll miss that one,
Yep.
and we'll get this move.
Mm-hmm.
That is it. Because what else are you gonna wait for? Some people, you know, like some people, yeah, this is your 15 minute. You know what they'll do, bro?
Go 5.
When price is here, let me find a 1 minute order block. Why? Why do that, right? You can just literally hit that on the 15, stop loss there, hit, take profit there, Bob's your uncle. Like, that's it. Nothing else needs to be done.
No, I love it. I love it. I think let's go over just very briefly, because I think people have already seen the pros and cons of this. So in terms of cons, I would say, obviously, it's not really a con. As we say con, but what we mean is, don't watch my spelling, because that's probably wrong. But what we mean is things to be aware of. So this will require patience, right? As you can tell, you have your framework, you need that to play out. So once you have that, you're patient enough to wait for the trade. As Omor said very early on, there won't be a trade every single day. You need to wait for that framework. So patience, not necessarily a negative thing, but something you need to be aware of if looking to implement this, is you need to be patient in order to let that, well, in multiple ways. One, the setup to actually form, but then two, even the entry as displayed there, if there isn't displacement, being patient enough to wait for extra confirmation before looking to execute.
Grading your swing and your displacement is the key. Like on a confirmation level, the displacement is like, a lot of people, they don't wait for the candle close. They'll see like big body candle and they think it's time to get in. And then on the close, they're already entered. It's like 9% wick.
Yeah.
And they're finished. Like they already know, like I jumped into early.
Yeah. I'm going to put down scalping. You can scalp, but as we talked about, very erratic. A lot of chaos. And
Yeah,
there will be people out there who can do it. For the vast majority, that's going to be something to be aware of and sort of stay away from.
I'd say as well, a con for that is, the con for it as well is when to ditch the OTE level, like the 62. And remember what we said. So when you want to ditch the OTE level, yeah, is usually on the first leg breaker. Breaker block, the price doesn't really kind of get optimal trade entry on that first retracement.
Yes.
On the reversal, it will probably get 50% or less.
So you could say there's slight
But
discretion.
you can hold, yeah, there's definitely everything has some sort of discretion in it. Unless you're a quant trader, anyone that tells you it's a fully mechanical model is a liar. Because in the end, there's discretion on whether the trader should hit or not. Like there's intuition in trading. So that's literally one of the differentiating factors between people in any sport, is always some sort of discretion and intuition. Like some people know how hard to kick a football.
Yeah.
Can you teach someone how hard to kick a football?
No.
You can't teach them like, oh, you want to get the football there. Let's say you're teaching your son how to play football for the first time. Dad, how hard do I kick the ball? What? I don't know how hard, just however hard you need to kick it to get. You can't teach intuition. So intuition definitely is a big thing in trading.
I think one of the pros though is definitely, you got your rules.
And the consistency in the R.
Yeah.
Because people say just aim for 2R. Okay, but what about if you're really positioned low in the range? Like, people that take the first like fair value gap. But if you're working off the optimal trade entry levels, it's going to give you that 1.63R.
Yeah.
That 2 point something R, I think it was 2.3 or like 3.75R. It's fixed no matter how big the range is, because you're always working in a percentage of the range. Like, you can go fact check that. If you go take your short tool or your long tool and you just go and put your stop loss at the 1, take profit at the 0, and you filter the entry at those optimal trade, you'll see no matter how you change the fib, it's the same every single time. And it's really good, Jed. You know why? Because, like if you consider a prop firm challenger, like 10% traditionally to pass phase 1. If you bump the risk up a bit, like to like 1.5%, right? I don't know, like 2%, a lot of problems kick in with the prop firm. They saw you're over leveraging. Like 1 to 1.5%, yeah, at the 62 level with a 90% stop loss and the 0 TP, it's like 2.2R. So you're gonna get like 1.5 times at near enough 3R, right? How many of those do you need back to back to pass? 3 filtered out back to back. So you can literally just have that as your plan, right? You say, I need 3 of these OTEs. I don't think 3 is a lot. Obviously, you can have some wins and losses, but inside of 10 trades, Inside of 10 trades, definitely with that optimal trade entry filtered out, you can get to your profit. You can get to your profit level, because people don't have a plan. That's people's problems. Like, you know, like I told people all the time, look here, if you get that 705, 90% stop loss shave, and you get that TP, just an original TP, 2 trades back to back with a bit 1.5% risk, and you're done. And literally, you're passing a challenge in 2 trades if you can filter that setup out and wait for that.
Yeah.
And you can only rely on that, and you can patience. I know people that have done it. We've done that's kind of like a framework that we kind of use.
Yeah, no, 100%. That's why you can see the results.
30 plus million, 1.1 million in payouts. I'm telling you, this stuff's easy. It's, you know, the mental and like being able to like make a plan, like how to tackle a challenge, how to consider this, how to consider that. Yeah.
Rather than just freestyle and go.
Exactly. Some people they're just trading with nothing else in their brain other than I'm just looking for a fair value to trade off. I don't know. I'm going for 2 or 3 or I don't know. You can only do that for so long to get to that next level. Yeah. It's like going to the gym. If you don't track your workouts and track your diet to a certain point, you'll cap yourself. If you go to the biggest guy in your gym, tell him what you train, he'll tell you his plan so in depth. He'll know what he's eating. He'll know what he's training, how many sets. He'll know like how much he's trying to like lift, the rep range, everything. It's the difference between every single athlete. Trading is no different. The difference between a very good trader that do well is that they got plans, they got protocols for these things, and this risk for that entry here, or TPs or here, or whatnot.
Perfect. No, I love it. And just to finish off the pros there, we have consistency in the higher time frame to lower time frame sort of rule set and path, if you will, in line with momentum for sure. And then your risk management as well. And
the trade management, going back to the 0.2, so you can shave the risk off once you're in optimal trade entry. You see prices now like around 0.2, 0.3, shave the risk off. It shouldn't go back to that level. If it does, you're probably going to be in trouble. So break even the trade. And another thing is, it's very easy. You know, like a beginner can really just, look, it's levels, it's numbers on a fib. You're just waiting for numbers on a fib. You know, people that say like, you need this specific model, this, and then this breaker block, this new PD array, whatnot, this inverse, whatnot. Look, forget all of that. There's numbers. If you can't see the numbers and wait for that, you have a problem. Exactly. Generally, like, if you can't wait for a big 62, you're not trading if you can edit the text of your fib. You can make that 62, that 705 big, and you just wait for it. Limit entry, if anything.
100%. Love that. Well, it's time. I'm sure everyone's been waiting for the charts. So we'll pull that out now and go over some trade examples showcasing this exact model.
Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with propfirmtrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what propfirmtrader.com does. Propfirmtrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on propfirmtrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. Just look on screen right now. You can see futures firms, you can see CFD firms with offers up to 50% off, which is incredible. And you can also see Alpha Capital there with a one-step challenge with 25% off using PFT1. And there's so many more exclusive discounts only on propfirmtrader.com. It is the go-to site for all prop firm traders out there. And one thing I'm really excited about that I personally helped to organize was the giveaway of giveaways, the 7-figure giveaway, just through purchasing your challenges for the best price through propfirmtrader.com. Every single week, you will automatically be entered into an incredible giveaway, a collaborative effort across all of these firms on screen, between 100 to 200K accounts, over 7 figures. It means that one person every single week who's made a purchase through propfirmtrader.com will be getting 7 figures in challenges that can completely revolutionize your trading journey. Again, all you do is for any of the firms on propfirmtrader.com, use the code PFT at checkout, and you will automatically be entered every single week. The link for propfirmtrader.com is in the description below. Now let's get back to the episode.
So yeah, now we have the charts out. We're going to go through and show trades that were actually taken using the exact model that Omar just went through. And where are we going to start from?
So remember, framework into the entry. People kind of mix the two things together. They think that is my entry. Like, oh, what do you trade? I trade the market maker model. No, that's framework, right? So where do you expect the framework? High time frame key levels, right? High time frame key levels, that's where we expect it. So USDJPY overall, we've been bearish on it. There's been a macro factor for USDJPY to kind of trade lower. And then you can see, you know, look like here, displacement. Remember, look at that body close. Look, we're running this low, running that high, right? Didn't position here. But then what happens next? We've got this new range made, high to low, right?
Just to go back, as you were saying, so this is your, essentially your accumulation, your manipulation, then your distribution, and then the reason you didn't position there potentially was just simply that you didn't get,
literally
didn't get your OTE,
yeah, just
but that's fine. Going back to your exact example was you then get it later on.
Yeah, so as a swing trader, right, that's the optimal trade entry right here, right? But obviously I know people are more geared towards day trading, so again, these are all things that were shared in like the group whatnot. So in my Telegram channel, people that know Intermac episodes, it's all here. So you can see as a swing trader, there, stop loss at the 1. The 90% was actually kind of a new thing in the last month from like the data that I've come.
Okay.
So I'm not gonna lie and say I used 90%. I didn't use 90% there. So from here, right, this daily PD array. Remember what we said: previous day's highs, previous day's lows, weekly highs, weekly lows, 4 hour plus PD array. So 4 hour plus meaning 4 hour, daily, weekly. Monthly, no need, too much variance, right? Bit of scrolling, sorry, one sec.
That's okay.
Now, what you get is this, right? In Asia, with yen pairs, you kind of get them kind of moving in thingy. So we get that reversal. Now you see this move, clearly, we're running this high and we're breaking down this low, right? If we go to the 30 minute, right?
One sec. We save you the headache. Oh, okay.
Yeah. If we go to the 30, right? That's a different one.
I think that 15-minute was the other one as well.
No, it was this one. It was this one, right? You got optimal trade entries, right? You got optimal trade entries from here to this low. Remember, if it meets a PD array, then you're gonna ditch it, right? And then New York 8:30. Remember what we said, 8:30. If there's ADR in the day, remember what we said, yeah? If there's ADR in the day for London, this is the daily candle. It's gonna be that small candle. Then you'll still take the retracements, right?
So what you mean by that is ADR is like your average.
You
pip
still got room
right?
to play with. You still got room to play with.
Exactly. So like at that point, if there's still room to play with in terms of the average amount of pips that the pairs move, then you would look to obviously continue to trade.
So when you got a fair value gap, like optimal trade entry with a fair value gap, yeah, you're getting 50% of the fair value gap, right? 50% of the fair value gap, just get in, right? And you can put the stop loss, like, look, for example, like here, right? You see like how I had the 90 here, right? Bro, if price gets to the 90, you think it's not going to get to the 1. Do you see my point?
Yeah.
Now, if we delete that, and then another one, it's just until the drawn liquidity is met, and another one, and then this falls out of the kill zone timing, right? We won't look to kind of enter on. You kind of see you goes kind of sideways anyway. I mean, in hindsight, yeah, this was another optimal trade entry. You would have got the initial take profit. But you see how if you can position in London, you can hold through the day. Remember what I said, because London, how a daily profile kind of works is if you can position in London with manipulation, you're going to have the whole rest of the day for that distribution side of the curve. That right hand side of the curve is going to be like longer. So you can position there, right? If you go back to the daily, right? The next one is this previous day's high, right? So you can see, right, we have this, we're coming back down, right? We've got a fair value gap here. Now, when this is, to me, what I love, yeah, is this. You got a previous day's high, yeah? and this is going to be a good example, right? Actually, let's cover this one first. So you're still here, right? You're coming down lower. Now, when we see these down candles, yeah, you're still trying to position sells in them. Now, when I got this up candle, remember, I'm bearish. So when I get this up candle and we're opening close to the high, to me, I know next day I'm going to go in market make a sell model from the previous day's high, right? So if we go 18th Feb, we go 19th of Feb, yeah? March. Oops. You know, it's usually I have a mouse. So again, here, right? You can see this previous day's high. We see how we're trading up to it. Remember what I said, right? That move, right? On the
Because where you started on the whiteboard, you had said, you know, the first things you wrote, previous day high, previous week high.
And how
low.
does that move how does that candle form to take it? It will open, manipulation, takes it. This is where you're thingy. This is where you're looking to align, right? If let's go to the 30 minute again. I'm telling you, 30 minute, yeah, is slept on, man. Like, if you genuinely, it was the 19th of February, yeah, right? This, what I try to do, right? Now, I'm gonna give you another OTE pro tip, right? You see here, if you're banking, yeah, the 90% is gonna be your stop loss, right? Now, you can enter 50% and put your 90% stop loss there, or if you see, right, and this is going to show you the visual, right? If I put my fib, my new anchor, because this is invalidation level, you're just anchoring from invalidation level, right? You see how it's more optimal trade entry. The risk to reward will give you the same. So you can either just use this, right? 50% get in, stop loss of the 90%. Because that 10% that you're taking away from the stop loss, you're putting that 10% now onto there. So if you're getting at 50 and your stop loss at 90, it's really like using the one swing and entering at the 60. Because you're just taking some of the percentage from the stop loss and you're putting it onto your entry. Do you see my point? So it's you can manipulate the risk to reward with that. That's why I like it. So yeah, you remember, we're not. Why wouldn't we get optimal trade entry? Because the breaker block. Remember what we said. The breaker block, yeah, is going to get in the way of it. And then what did we say? Remember what we said? Then the second leg, you only want optimal trade entry, and there you have your optimal trade entry. There, stop loss goes. 90 was saved, 1, whatever. And then remember, if you're getting displacement towards your TP, there must be someone in the world that caught that whole move, innit?
Yeah, definitely.
Yeah. So this is a really good example of the whole template happening, right? Previous day's high sweep.
Because bear in mind as well, you're entering from these, if you will, lower time frame OTEs and ranges that you're placing on, but then the framework came from your daily
4 hour. Yeah,
right?
exactly. And that's and one thing as well, right? This is Tuesday. If you're nailing that Tuesday high of the week, yeah, on a weekly profile, bro, if you hold that trade throughout, you can have a monster, like a really like monstrous trade. How many of these do you even need, yeah, on like 200k capital, bro, to make like some serious returns? But yeah, that's that trade setup. Why it's really good, yeah. Again, it shows you breaker block. You don't want to fetch for the 62 level. It probably won't get there. You want to just hit the breaker. Breaker is usually going to be 50% of the range. Just how the whole ranges are in general. You're going to get your fair value gaps in your breaker block, given around 50% give or take. But that second one, try fill yourself out. Have like the discipline, optimal trade entry, and then manage the risk. So remember, look here. Remember, I have that 0.2 level, right? When it's going to get there, consider if you got a close there, remove the take profit. You're at break even. Try go for a runner. These are extension levels you can have. Mine is 0.28, mine is 0.62. I don't really know why I have them. I just copied them from ICT from back in the day, but they seem to work. I don't know really the theory behind them. Again, UJ. You see, if you follow me, you know how vocal I've been about UJ. UJ is like all I've been kind of focusing. Now, this is going to be a good example, right? This black line again. Remember, fair value gap. Now, we opened close to the now when we're in a PD array and we open close to the previous day's high, right? So I'm bearish. This is an up candle. That's good. That's good when you want to sell, because you're going to open close to the previous day's high. Now you're going to open close to the previous day's high. It's easy for price to open, trade above that high, and you can frame bearish reversal. But look at it. Check this out. This is that high. Did entry come here? Nope, it didn't come. We missed that. So do you know what happens, yeah? Now this is like a good gem, yeah? When you get that, go back to the daily, you're gonna see this green box, yeah? This is a 4 hour level. When you see, yeah, you always have to kind of be monitoring as prices like printing.
Yeah.
Your new key levels are gonna form, right? So you see this, we didn't get no entry on that day, yeah? So now the next day, you're gonna continue on. We're gonna expect the candles to print lower, print lower, print lower. That's what we're gonna expect, right? So what we can do is there now, we're trying to sell. There's no previous day's high to work on. Okay, cool. Previous day's high is already taken and it's expanded. Chances of a 4 hour fair value gap being left by high. So we're gonna look for the 4 hour fair value gap. Because remember, previous day's high taken and displacement, 4 hour fair value gap here,
Yeah.
right? And we can get onto that, right? Just third, probably the fourth, yeah. Damn, it's April already, man.
Time's flying this year.
Yeah, literally, man. Yep, so if we go here, let's go 30 minute. So remember what we said? You got this low, running higher. Now remember what we said there, no wiki close. We're gonna let that go. We're gonna let it go. We wanna wait for this to be closed under. Until this is closed under, I don't care. How many legs it needs to go and close there, it needs to close there. And then you see we get this, that move there. On side. Remember what we said as well? If there's an opposing fair value gap. Remember what we said, yeah? It's either if that's a wiki close breaking that, or there's an opposing fair value gap there, we wanna wait for that to get closed through because we can just go, right? So we see how we're closing the majority of that gap. London's high to the low, optimal trade entry. That's called a London to New York optimal trade entry.
The one you mentioned.
London to New York optimal trade entry. And by the way, these aren't just hindsight, like these are all that will execute upon, right? And that's it. You can just take that. And then this, like, I know people saying, oh, you know, like, just, don't know why it's doing that. Then you can see this high to this low, way out of the session, we would have never taken that. I'm not going to lie to you guys, right? If we go to the euro, by the way, I haven't even really done too many euros. I think this is like the one or only. So this,
Just click this up.
Perfect. So this, yeah, on euro. And whenever you get something on euro, you can look to the dollar, you'll just have the inverse of it.
Yeah.
So here, right, was Wednesday. And you see Wednesday we're trading down and we're inside of this fair value gap. And I mentioned in Asia, right, we kind of took this low and we start to really displace higher. I'll show you the times, right? If you go to this date in my Telegram channel, the 27th of March, you'll see the whole Interbank episode, like the play of the day for myself. Like we've taken the low and we're really displacing higher. The chances are we're going to probably take the previous day's high and start taking these candles highs, right? Whenever you kind of take the previous day's low and you start displacing away, the bullseye is on the other end. Someone on Twitter says he coined that. It's been around for years, right? So from there, that's your level. From this level, what do you expect to find? Your framework. And then when your framework is showing itself, then you find entry. So it's a really succinct order. Do you see my point? So you got you need a favored direction, then you need your model to form in that direction, then you need your entry inside of the model, right? You can call it like the XYZ plan. And then, yeah, go to your 15. This is a good example because we know we've been in so many sells, right?
Yeah.
So this is, but by the way, it's still a sell just on the dollar. So it's still a sell, but you're just buying the dollar,
yeah,
right?
That makes sense.
Selling the dollar, buying euro, sorry. So you got this high, lower, low, high, high. That's your breaker block. And I mentioned, watch the breaker block. Now you see the times this is happening. Look here, this is happening in Asia. Look, this is 8 o'clock here to midnight is Asia. 8 to midnight. And this is in Ramadan. So like we're awake at this time in the UK with like to eat suhoor, yeah. So I was mentioning, you know, we took the low and look at this energetic move, yeah. We're probably going to run these accumulation, right?
Yeah.
So you're coming down. Optimal trade entry. Now, the reason the breaker lined up with this as well is because the range is big. You see, as the range is getting bigger, the numbers kind of like move about.
Of course.
Yeah. If it's a tight range, which usually is with the breaker, like it might get to like here, then you won't get optimal trajectory with that breaker. Look, I'll just show you what I mean. So let's say I anchored the fib there, and we only made a range like to here.
Yeah.
You see, like it's like barely 50%, right?
Exactly. Yeah.
And then, so from here, 90% level matches up. Okay, we'll probably go 90 because from here, if it runs 90, it's going to run there. Enter. You're going to go for at least the anchor here. Now, you see this, yeah? People are going to think, okay, the next anchor is going to be from here to here. It's not. You always want to anchor on external ranges. Not this high, right? We need to break this high and then anchor from there, right? Then you look at the low before the break on this high. And another good example, right? This day is also, there's an Interbank whole episode about this. And it was actually good because in the group, the new people that joined, they're like, how did you guys got optimal trading tree? I was missed by 1 pip. And then the guys that are more seasoned saying, bro, if there's fair value gap ahead, if there's a PD rate that's ahead of it, like order block, whatnot, price won't really get there. And you take the 50% and you kind of just consider like, you know, because if you think price shouldn't get to 62, for sure price shouldn't get to 90. So put your stop loss at 90, take profit. You can either take profit at 0 or have your liquidity levels, your old daily highs. What I mean by old daily highs, if we go into that quickly, what I used for take profit when I day traded, yeah, was literally it's easiest thing if I just hide all of this. If you're long, yeah, each of these candles highs, like the wicks when you're long, is a drawn liquidity. So you see this one taken out. Okay, tomorrow you're gonna work towards this, and then this, and then this. And if there's a fair value gap there or any PD raise, those are also draws on liquidity, right? And yeah, that's pretty much all. Actually, if you go to the dollar, you'll see this as well. It's actually pretty cool. So if we go to the monthly,
yeah,
you see, what do you see? High to low, running this high, making our way lower. Now, and if you go to the daily, what have you got? You're running old monthly highs. You got market maker sell model. It's a fractal concept. Look, yeah, it's about using a high, any time frame, right? If you get a run on a high, the time frames under that will show this market maker framework, right? Now, obviously, don't take that and say, okay, so he's basically said every run on a 50-minute high, 1 second should, yeah, okay, you'll get that, but I'm not saying it's tradable. It's going to be tough to trade that, right? So if you run an older date, if this is a previous day's high, imagine this is your 15-minute chart. Forget it says the 1 day there. If this is your 15-minute chart and this is your previous day's high, all of these retracements, OTE, this one didn't get OTE. There's another one, a high to low here. Volume imbalance, this is a break, a block here because this high, low, high, high. All you need is that. And then remember what I said, if you're from your daily, if you go into your chart and look at every single, when you're bearish, previous day's high sweep and then displacement lower, the next Q is that 4-hour PD rate. So you always work like, okay, there was a sweep. There's no point away for another daily PD rate because there's going to be a 4-hour one left now. 4-hour PD rate, and you're going to keep just going off of that. And then another 4-hour PD rate, and then a new 4-hour PD rate, new 4-hour PD rate, and until price looks like it's going to show intent for another previous day's high sweep, and then you go. It's like a sequence. Yeah, it's like a sequence, and you kind of have to wait for that because once you kind of get one of those deliveries going, yeah, with like the previous high sweep and 4-hour fair value gap, you can get like a few back-to-backs. You don't need too much. I think the prop firm stats from the CEOs that show all the stats, the best traders less than 10 trades a month. Yeah, less than 10 trades a month.
Classic, less is more.
Less trade. I know guys, yeah, I know of guys, not in my group by the way, because I get a lot of messages. You can imagine I get loads of like DMs. Yeah, bro. There's people that blow 2 challenges, 1 each session. London, I bought. I literally bought. Yeah, London, another eval, and I blew that in New York. Yeah, these people got more money than sense.
100%. Yeah, but I love this. I love how simple. Not only from the whiteboard drawings, but even translating to the chart, it actually seemed more simple on the chart than anything.
Oh yeah, man. On the whiteboard is you got the price to work on this. Yeah.
It makes it easier. But no, the success has been shown through not only yourself but also so many people that I've actually interviewed as well and spoken to directly. So it's phenomenal. And I know that the audience out there, would have loved this. Drop a comment with the biggest takeaway from this episode. Any questions actually you have off the back of this, drop them in the comments below. Myself or Omar will be checking that. Links for Omar will be in the description below, so check those out too. Hit subscribe. Other episodes are on screen. And until next time, everyone, this has been Chart Fanatics. Take care.